Welcome back. You're watching us here on Markets Today. Let's talk about the fourth headline for the day then. SEBI chairperson says that the regulator won't allow products that curb exits or exchanges to charge for public data. In fact, she said that the SEBI is open to innovations like algorithmic trading, but the process must be transparent. Let's hear out Madhavi Puri-Bhuj.
If the regulator senses that there is inadequate disclosure, then the question is the investor being misled? This is a little bit more aggressive form of the same issue. Is the investor being conned? If your business model is going to rely on a black box which is not open to sunlight for disinfecting, if it is not capable of being validated and audited, and your claims cannot be audited and validated, it cannot be permitted. A business model which relies on the assumption that once the customer is in, it's very hard for him to get out, we don't like it.
That's the word coming in, loud and clear from the new SEBI chairperson. But let's move on to the last but not the least important headline of the day. A bunch of stocks were in focus, Triveni Turbine being one of them, gained over 1% as nearly 22% equity changed hands in a block deal. Promoters bought 10% stake, and Vivek Iyer is here with all the details. Vivek.
There was renewed buying interest and there was quite a bit of chatter as far as the stake of Triveni Engineering in Triveni Turbine was concerned. So at the end of the June quarter, Triveni Engineering held almost 21.85% stake, and the company had said that they had decided to divest the entire stake. So today, along expected lines, the entire 21.85% stake held by Triveni Engineering and Triveni Turbines has been divested. Now, out of that, 10% stake was bought by the promoters of Triveni Turbines. And very interestingly, the remainder of the stake, we had the management of Triveni Turbines tell us that very strong interest was seen. And in fact, sovereign wealth funds, both from Singapore and Abu Dhabi, as well as very large Indian mutual funds had participated. Going forward, they did mention that there could be more inter-se promoters transfers happening, so that the entire alignment of the management of Triveni Engineering and Triveni Turbines would be along the lines that the management has alluded to.
All right, Vivek, thank you for that. Sticking with the stocks which are in the news, KPIT Technologies was also in focus, rallied over 4% after the company assured, or rather acquired, a European-based company, technical engineering company, for about $80 million. Rima joins in with the contours of the deal.
Thanks so much for that. So KPIT Tech has made an acquisition of an EU-based automotive company called Technica Group. They will be paying 80 million euros for this acquisition. Over and above that, there is about a maximum of 30 million euros earmarked for earnouts over the next 2.5 years. The acquired company had revenues of 43 million euros, which roughly means that it can add about 10 to 11% of KPIT's annual revenues once fully consolidated. The acquired company also had EBITDA margins of 20%, so slightly more than where KPIT's current margins are, and the management has said the acquisition will be EPS accretive from day one. The acquisition will be closed in October of this year, which means in FY23, KPIT Tech will get the benefit of 5 months of consolidation of this acquisition. So it should boost the company's FY23 guidance, which stands at 18 to 21% in top line volume growth of 25%, as well as margins of 18 to 19%. So let's see what the company has to say about the updated guidance for FY23 post this acquisition.
All right, Rima, thanks a lot for that. The other stock on our radar was SpiceJet. Continues to decline as problems continue for SpiceJet as well. And this one, the most recent one, is the cost-cutting measures that the company has announced by sending 80-plus pilots on a leave without pay. Sonia joins in with more. Sonia.
Well, thanks a lot for that. SpiceJet has been under a lot of pressure because the company is going through a severe balance sheet crisis. We've been reporting this for the last several months, and the latest is that 80 pilots have been put on a leave without pay for the next 3 months. Now, the management does say that this is in order to bring down costs. Remember, the company was looking to raise funds for the last many days, but on the recapitalization front, nothing has fructified. If you look at the trajectory for SpiceJet, right, in the last 5 years, the losses have steepened significantly. In FY22 itself, SpiceJet saw a loss of around 1,722 crores in the full year. And there have been problems galore for SpiceJet. You had the CFO resigning a while back. It was the second straight month of delaying payments to its employees. The auditors said that there are some concerns that SpiceJet may not be able to go forth without raising funds. On that effect, the management has several times said that, yes, the fundraising plan is in action, but nothing has fructified so far. And the latest piece of news that 80 pilots have been given a leave without pay for 3 months just goes to show that the balance sheet problems are still underway. Also, other issues, like the safety concerns as well as the deregistration of some of their aircrafts by the DGCA has plagued the operational performance of the company as well. All in all, more disappointing news coming in for SpiceJet.
Disappointing indeed, but not so much for the paint maker, Dulux Paint maker, AkzoNobel, as we had the management saying that, they're looking at increasing their margins between 15 to 17% over the next couple of quarters. Importantly, they're also looking to gain more market share after having gained market share already, and be the number 3 player from number 4 that they are. And on those comments from the management, you can see there was a spike in the stock and it sustained through the day with a gain of 4%. Let's hear out what Rajiv Rajgopal had to say to us.
I still maintain that it will take a couple of more quarters to really see the softening in coming in really accretive from a margin perspective and from a P&L perspective. We've gained market share in the decorative paints, something that we want to consolidate and build on. Remember, when you look at decorative paints, we've got a very high share in the premium. So when you look at brand Dulux, we've got the Dulux Velvet Touch advertising going on. We've seen across all the channels, etc. So, that's a brand which has really revived very well, doing very well, having strong demand. Similarly, Dulux Weather Shield, which is our exterior brand, is doing extremely well. So, our endeavor has been to really, how do you gain, across in the mass market, where we are slightly underrepresented historically. We actually spend 3 to 4.5%, not 6%. Our endeavor is to come to 5 to 6% on terms of advertising.
All right, with that, it's a wrap on this edition of Markets Today. Thank you so much for watching. Stay tuned to CNBC TV18.